Hello, everyone. Happy Wednesday. We're starting our weekly webinar, Inside Circle Interactive Trading Conversations. Welcome, everyone. A special welcome, of course, to new people. Few things about myself. I'm a senior account manager with AvaTrade. I started to trade personally in June of 2000, so it makes it almost 24 years. For the first 11 years, I did prop trading in New York City. Was pretty stressful. And then after 11 years, I moved on to a different, less stressful way of trading. Also, I started to mentor and educate other traders. Agenda of the webinar, we ask questions, and this was the idea of creating this webinar, is to create an environment where people can come and ask questions about specific assets. And that's exactly what we do here. As you were helping me typing okay in the questions window, that's exactly where you're going to be typing your questions. Please feel free. We have up to an hour, and I hope that we have plenty of questions, and I wouldn't need to beg for questions. Sometimes it does happen. Also, as I said, we have up to an hour. So if we run out of questions, we're going to wrap up earlier. And I really want to stress this out. A lot of people will be watching this on YouTube, and they don't have a chance to ask the questions. They could just watch it as a recording. So please think of those people and feel that you're doing a good deed by asking questions. So a lot of people that are watching or will be watching this recording will be actually having practical questions or answers that they've been looking for. Okay. All right, risk warning, you can find a full document at avatrade.com. And of course, what we do here, it's purely educational. We do not suggest any trades. Social media channels, please feel free to subscribe. You have Telegram, you have X that used to be Twitter, and my favorite, as I always say, is YouTube channel, where you can find a lot of material, educational tutorials, and as I said, the webinars are being recorded and posted here. So if you can't make any of the webinars, don't stress. You can always get back here to the YouTube channel and you can watch the recordings. Okay, so we're ready for questions. Again, it's very important for you to understand. I will not make up any questions just to keep the audience here and watching and listening. I created this environment so we can all benefit from it. So we can ask specific questions, get answers, and gain some practical knowledge. Okay, so let's go ahead and start asking questions. You can ask multiple questions if you like. Don't feel shy, and let's start. Again, I hope that we will take the whole hour, that we don't need to cut the webinar in the middle. Okay, all right, let's go. A lot of new people, just to make it very simple. You want to know about specific market. It could be a specific currency pair, like euro dollar or dollar yen. It could be a specific stock. It could be a specific commodity or anything else. Just type a question there and we'll talk about it, okay? Okay. Always asking a question. Hi, Simon. What's your take on US CPI today as rising home and gas costs pushed US inflation higher than expected in March? Do you think this will continue till month's end or all week? Okay, good question. The CPI numbers came higher than expected, and it's pretty much no-brainer because as you can see around, prices are not going down, right? We had oil running up on different reasons, including the geopolitical reason in the Middle East. We have something that I mentioned many times. The Red Sea crisis is still there, and it's not getting any better. So a lot of retailers, and I mean the only ones that are really gaining from it is the shipping company. The shipping prices went through the roof. Uh, it costs more. It takes longer if they take the merchandise around. So that was kind of obvious that the inflation will be higher, or reading on inflation will be higher. So market reacted to it right away. I mean, we can take a look, for instance, the S&P 500 on the announcement. Take a look. This was the 5 minute before they did run it up. They spiked it up, took all the stops. Take a look at this move, right? On the daily chart, we raised the whole week of actions. So market really took it disappointing, and it makes sense. We had also NFPs on Friday; they were higher. So just to remind us that we're focusing now on the Feds, and the beginning of the year, the focus was on the March interest rate cuts, which would be beneficial to the equity markets. And then since the last few readings of inflation and other things, it looked like June could be the first rate cut. But with the employment numbers high and now inflation coming out high, it could be pushed away. So that really triggers a sell-off. And first of all, it's the sell-off of regular sellers, and also there were some buyers and dreamers thinking they were going up indefinitely, and they're getting out as well. So we are having a sell-off on the market on the high volume across the board, right? Will it hold into the upcoming week? I mean, we're waiting. We don't need to uh, kind of expect things. We just take one day at a time as traders. And the very next thing is actually coming out in about 48 minutes. We have FOMC minutes for the last meeting, and everybody is going to really be watching and listening to it carefully, because we need to know also, or the traders and analysts are looking to know what's happening as far as the Feds unloading all the assets that they purchased, about 5 trillion of assets in the quantitative easing. So that's something that will probably give another push or pull in the market in about 47 minutes. We are the 10th of April. We're definitely going to have more data coming in. And if you look at the S&Ps as a general indication of the global markets, of course, it's a US index, but it's very diversified. So as you could see here, after making the all-time high on 31st of March, closing the quarter on the highs, we're really selling here since the beginning of April. So we'll see. We'll take one day at a time. We'll take one bunch of news at a time. Okay. Guys asking, the USD seem to have strengthened today with gold and oil trending lower. Absolutely right. Dollar got strong, and if you were here for the previous meetings, or if you were watching my weekly webinar that I do on Sundays, I mentioned this channel that we're in between 104.15, 104.83. And I said that 104.15 has been a serious level for a while, but take a look today. In one move, we just went above that level, and we actually went above the previous double top here at 104.83. So dollar is strong, and for a very simple reason. If the Feds are not in a rush to cut the rates, that's good for dollar, not so great for the equity markets. And gold, actually, I was watching gold during the announcement. It did sell, but then it tried to recover. Let's take a look at gold really quickly. Here we go. See, this was the initial move on gold to the downside. Then we recover to the pre-news and then we're selling again. So on the daily chart, it is a down day for gold after making all-time highs again yesterday. And on gold, there are other aspects there, and some analysts were asking valid questions. How come the dollar is strong, the markets are strong, and gold is strong as well? So one of the analysts was interviewed, and he said that gold is acting also as an anti-inflation instrument, which we're used to, and also is acting as safe haven. So besides those two things, he said that lately a lot of central banks, the world central banks, actually were busy and still are busy purchasing physical gold to offset the inflation. So that's been going on a lot. And also, there was an article I read this week or the last week, I don't remember when it went out, that actually in China the investors, the retail investors are purchasing gold because they don't feel secure with the equity markets, with local markets, so they are buying a lot of gold. And as we know, there's a lot of people in China. I think it's 1.5 billion, if I'm not mistaken. So those aspects pushing the gold, and it's been lately. If you take a look over here, each correction push the gold higher. And let's see. The questions here now, is gold going to be safe haven if we see markets falling? If we see them falling, it's not for sure. We could actually recover here because a lot of analysts are also bullish on markets, and some are setting up the end of the year targets for S&Ps at 55, 5,700. And we're currently around 5,200. So if the market were to collapse, maybe gold will trigger again that safe haven, the money will flow into it. So we might see push to the upside. As of now, we'll take one day at a time. As I said, we are selling today, and let's see what's happening next. Oil has been doing well, and I think this the last 2 days of selling, there are a few reasons for it. First of all, it went up on one of the fears. Actually, I'll just explain the whole thing on oil, which is really a popular instrument. So as in any market, we have two sides. We have demand and we have supply, right? So on the demand side, some analysts explain that the consumer spending is high, and that's actually pushing the demand for the oil higher. That includes different things: shipping, transportation, other things. So the usage of that is high, the demand is high. On the supply side, they said in March, Russia announced that they will be cutting production by another 471,000 barrels a day. So that was on the supply a little bit fear. And then we had the fear recently, ongoing conflict in Middle East, in Israel, as you know. And recently, Iran was threatening with the hitting Israel or bombing Israel, whatever they were planning on doing. And U.S. warned that it might happen. So into that announcement, oil went higher, but then over the weekend, things were quiet and oil cooled down. Another big reason currently of the oil selling is the China is cooling down as well. If you look at the China market, after trying to break out of this resistance here, double or triple, we failed and we're selling today. I think one of the reasons because the US market is selling as well, but China definitely, they have their own issues. So as you could see, the last few days selling on China is also affecting the oil, as you could see as well. So if that continues, we might see continuation. The question is here, this is a demand selling, right? Let's see if anything happens on the supply side. And it could be that we'll move further till we find the support. It could be this is a normal correction before moving higher on oil as well. And of course, we're holding the pulse on the events in the Middle East and see what's happening, how things are unfolding there. Okay, so that's to answer your triple question there, Guy. Um, Parvin is asking if a trade has gone wrong, how to hedge it in a good way to protect your capital on a small account. I mean, it's a tricky question. If the trade already got wrong, sometimes hedging it's already not helping it. If you're in a big loss and you hedge, you prevent yourself from the bigger loss there. But the side effect of this action sometimes, if you let it run too far with the big loss, again, you're saying a capital or small account, so don't really know how small and how far in losses you are. But some traders use, instead of controlling or managing their risk, they choose at some point to open the opposite position and they call it hedging. But I wouldn't call it hedging if it's too far, for simple reason, because if uh, you bought it too low and then you sold it too high, your gap between the buy and the sell is huge. So now you're kind of stuck, and sometimes market is going to be ranging in between those two. So now you have to be really smart and you have to be very quick, and you have to, I don't know, maybe have a crystal ball to know when is the top, when is the bottom, so you can try to close one end and hope that it will continue moving towards the other end, so your losses will shrink. But it's hard. It's hard to say this. I think if you ask any trader, a successful trader, I mean, some of them maybe are using the hedging strategy, but they're not doing it after the big loss. But most of the time, the focus is really on monitoring and controlling your risks. Okay. All right. We are good. We're about 22 minutes into the webinar, and I think we're ready for more questions. Go ahead, guys. Whoever asks questions, you can ask more if you'd like, and also would be great to receive questions from people that haven't asked questions yet. Feel free. That's no judging, no no stupid questions. Just feel free. Okay. You're welcome, Parvin. Okay. Always writing. Hi, Simon. It takes, for instance, a currency pair named Simon against USD, or USD against Simon's bearish. Would it mean that I really didn't get your question, or I don't know why you're using my name as a currency pair. It's a little bit confusing. All right, try to rephrase your question, okay? Oh, okay, Alex, I missed your question. I apologize. Okay, so Alex is asking when we can potentially see a reversal in the recent U.S. dollar trend that has been happening. I'm not sure which trend you're mentioning. Dollar's been actually facing the resistance a few times. So if the trend is up, it's a good question here. Because as I said, this is kind of a triple top here. And if dollar chooses to go higher from here, we just need to see a simple price actions. We need to see build up above this 104.83 level, right? Around this. Again, when I call 104.83, it's approximate number, right? That's where we stop here. High 104.83 on February 13. And then recently on April 2nd, we were right there again, and then correction, we're here again. So if dollar was to run higher, we need some, first of all, we need the closing above it. So if we close here today, we're officially above that resistance. So now we need to see if the support is being built, and we probably need either a few days above it or maybe impulse higher. We could dive below again because this move is really, it's a large move. It's more than dollar move to the upside. So, and if we dive below and start building resistance we might be channeling again. So for the move to go higher, we need a build up on support and push to the upside. We're talking technically now, right? And for the reversal, we need the opposite, a move below, build up at the resistance and moving lower. Now, of course, fundamentally, we need a supporting environment for that as well. We need Feds to be supportive. We need that interest rate cut to be pushed forward or pushed away or later than expected and so on. So we need numbers, we need Feds. As I said, we have about 34 minutes to see what Feds are doing as far as the assets that they build up. Okay, so we'll see. If we, it also can be possible that we have another day to the upside, and then that would mean that we probably want to see how we're acting around here, 105.81. That's another dollar to the upside. That's what the sell-off happened in November of last year. Okay, so we have a few things here. Now, some traders would actually consider this as a head and shoulder. Some would look at it as a cup and holder, which are bullish formations. But again, that's very subjective. It doesn't mean that it's going to happen. But visually, it looks good for the upside. Okay. Alex is asking. Okay. Guy is asking about commodities, cocoa and coffee. Cocoa, I like cocoa. It's been super aggressive. I think cocoa made about 280% from the beginning of the year. Those are the latest things. And very simple. It's all fundamental. As I mentioned when I spoke about oil, this is pure fundamental. It's a pure lack of supply. Western Africa is the biggest supplier. I think Ivory Coast and Ghana. They have issues with physical cocoa growing, and it's been super high, and it's been pushing. Each correction has been moving the market higher. We're currently at the all-time highs, so there's no resistance, and if that continues, it can go indefinitely, right? Coffee. I haven't followed coffee for a while, but we can take a look at it. So yeah, maybe the same reason. See, when you trade commodities, soft commodities, they're very sensitive to the weather and everything else. And as far as I understand, there's something with this El Nino thing that changed the climate and affect the harvest of some commodities. So coffee could be the one as well. So as you could see here, it's not as robust as cocoa, but we recently broke out of this resistance here of 203, and it could be that we're on the way to the next major resistance around 230. So if you are trading cocoa or coffee, you should be following the fundamentals, maybe weather and other things, right? Alex, your question, I didn't miss you. Don't worry. I'm currently in a sell to US dollar and looking to long position for markets to drop again. Is this the best thing to do or not? I'm trying to understand your question. So you sold US dollar and you're looking to long position for markets. I don't understand the question. Try to rephrase it, Alex. Try to make it simple. I really don't. Sorry. Okay, so always asking again, asking to rephrase the question. Hi, Simon. It takes, for instance, a currency pair named NOK against USD. If USD NOK is bearish, with USD being nominator, would it mean the Euro USD will be bullish? You see, I mean, NOK and Euro, those are separate things. Euro USD, if you take this pair, it's the most traded pair. So you have two currencies, right? You have Euro on one side that reflects on situation and inflation and economy in the European Union. And you have US dollar which reflects the situation in US, and not only because a lot of commodities being quoted in it. So I wouldn't create the correlation between USD NOK and Euro USD. Those are two separate enemies. You can create connection, or watch the connection Euro USD and dollar index. All right, that could be something. See, if you take a look at Euro USD, so dollar index is the mirror image of it, right? So that's direct correlation. Why? Because they both have your US dollar in it, but NOK, it's a different instrument. By the way, NOK, if you already speak about this specific currencies, Norwegian krona, sometimes it is sensitive to the price of oil as well, but it has other aspects that is affecting it, right? Take a look. As you could see, USD NOK has been selling as dollar was weakened, and also oil was going higher. And now today, US dollar is moving up. So I wouldn't connect that NOK and euro and create correlation or watch the correlation. Yeah, they connected through the dollar, but it's not. You can't say that they have dollar or mirror image. Like I give you an example of dollar index and euro dollar. Okay, it wouldn't work that way. Okay. Alex rephrase his question. Thank you, Alex. I'm going to read it now. Sold Euro USD and currently in a loss because of the immediate news from American banks. However, would it be better to close my position or long position till the dollar drops again against the euro? You say you sold euro dollar, right? And I really don't understand why you're in the loss. Maybe you sold it a while ago. So again, it's not clear. But if you sold it today, you should be a happy camper, right? And if you're expecting the dollar to drop again, well, that's what we just mentioned. Okay, so all right, so when I started to trade, I learned a very simple phrase, and you can abbreviate it into ATP, abbreviation, always take profits. Now, something that I'm going to share with you a little bit off the topic, but this is very, very important. Sometimes traders have a very good idea about the entries, and they're doing great by entering at the right times, the right prices, but they have issues. Exiting. So there's nothing wrong of taking profits if you don't want to close if you think it's very simple. First of all, you need to know your original plan. All right, thank you, Alex. I see that you sold at 107.94, so you're about 50 pips in profit, which is very nice profit. So there's always a dilemma, and if you trade it for long enough, I'm sure you experience the following. Sometimes you feel that you need to take the profit, and you do, and then the market continues your way, and then you feel really, really upset, say, I should have stayed. And then next situation comes and you remember the previous one and say, no, this time I'm going to be smart. I will not get out. I'm going to let it run, and I'm going to double and triple my profits. And guess what? The moment you decide to stay, market reverses, and your profit, your paper profit, either shrinks or disappears, or sometimes even turns into the loss. We all experience that. So there's a medicine against it. That's something that I learned from one of the amazing traders of our times. His name is Jake Bernstein. He's old now. He's been trading for maybe 50 years. So I learned from him this medicine, and it's very simple. If you're not sure, a classical question, should I stay or should I go, right? Always applicable in trading. So you can do both, and you can actually solve this dilemma. If you think the market will continue, so you can close some of your positions and then let the portion run, and then you can close it with a higher profit later on. If you think the market is not going and it reached your target and all the aspects show you that it's time to get out, so get out of everything, right? It's up to you. But if you choose, if you're not sure and there's an evidence of further move and your advantage. So Jake Bernstein is he has something that he calls profit multiplying strategy. So, for instance, if you have a certain position and you're in the profit, it reaches your potential profit. So what he does, and what I learned from him, that you close 2/3 of the position, you realize the profit, so you take it off the table, and then the third of the position remaining, he suggests to put a break-even stop on it, and it depends on your time frame. If you trade hourly, so the previous hour stop daily and so on, it's up to you. So basically, you took the profit already on 2/3 of the position. If it goes your way, so the left of the position could make you a lot of money or a lot or more money, and if you're wrong, then it turns back and actually closes you with the zero profit, zero loss. And that means that you took the profit on the 2/3 of the position, you already keep it. The market cannot take it away from you. You realize that profit. And then the remaining the position will close with flat result. Right? This way you solve the problem. And I personally like this idea because sometimes you get exhausted by just thinking what should you do, and you can't really think clearly. All right. So, but again, it's all individual. You know, some people just get into position and they have a specific number in mind, and they just don't get out until it hits that number. I know traders. If you look at the history, they don't have any losing trades, realized losing trades. So that means that sometimes they sit through a lot of losses till it comes their way. Everybody has their own game, so it's up to you and up to what kind of game you're playing. As long as you're in control, you're in the driver's seat. You have to know what you do. You have to have a plan, and you stick to the plan. All right. I hope it works. I hope it helps, Alex. All right, guys, we're doing great. We're about 40 minutes. Thank you for participating and coming up with questions. We still have time. Okay. So I guess no more questions. I want to thank you for participating. You've been great today. We are meeting again, God willing, next Wednesday. Also, I know some of you are coming to my Sundays webinars. You can find them. Also, if you missed them, you can find them as a recording on YouTube. I post them every Sunday, or the company posted them every Sunday. That's a plan for the week. Also, my colleagues are doing great webinars, Dan and Troy, on fundamental technical analysis. Please follow up, please subscribe. Also, we have beginners webinars and other things. And again, social media is here. You can visit us, you can subscribe. If you are watching this on YouTube, please write your comments, click the likes, share with people you care about, people that would benefit. And thank you again. Have a wonderful evening. All the best.